Good morning, everybody. Welcome to another round of the Flow Show. Nearly at the end of the week. The time seems to be flying by pretty quickly already. The 18th of January. Wasn't that long ago. Seemed like Christmas. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Stop about it, mate. I mean, yeah, I know it's we're already third week of January. I mean, this week is actually flying by, as you say. Yeah.
Must be something about getting old, mate. The clock runs faster. There's less sand to go through the hole.
I don't want to. I don't want to hear that because in a few days I'm going to change another big figure.
How are you?
Huh?
Not the big 7-0.
Oh no, not yet. I don't want to be rude, but no, I'm not at Dale's age yet.
What big figure is it then? Can't be 40.
No, I'm going to change for the big six.
It's a big 6, is it? Oh, wow, mate.
But as I said last year, I'm going to. That was my last birthday. I'm going to stay 59 for the rest of my life.
We better check out. You might be able to get some more free stuff when you hit 60. Get jump a few of those queues at the doctors and
Yeah.
whatnot.
Oh yeah, and not pay for prescriptions anymore, right?
Oh, happy days. There you go. I'll be giving you my orders.
Yeah.
Cool. Right. Well, enough about getting old. We don't want to be talking about that too much. Let's crack into what's going on. Not a lot of news out of China, except for stock markets hitting the skids still continuously. And it doesn't really matter where you look at. It's been a bit of a late bounce, but still been hitting some low levels. The Hang Seng dumping off a bit more, and as you can see, a bit of a bounce. Likely that's some intervention style buying, but we were heading down quite a sharp move lower again overnight. But as you can see, a bit of a bounce there. Probably intervention, I should imagine. No, not heard anything to that end as of yet. Over in Japan, again, a bit light on the headlines, but we did have a little bit of data out. Let's get rid of that. Oh, crap. Oh, now what have I done? Mucked it all up. Right, now I need to do all this again. Right, there we go. Boom, boom, boom. Right, so as I was saying, Japanese data coming out, industrial production. These are final numbers, so pretty much matching the expectations. Still not looking good in the manufacturing part of things. Large machinery orders, core machinery orders coming in much worse than expected on the month, on the year. Manufacturing is quite a significant part of the Japanese economy, though like a lot is moving towards a more services-led economy, but still a big chunk. And those numbers might worry certainly the government and the Bank of Japan in terms of economic activity. Coming in there, so not good news from those guys. Speaking of shocks, Aussie employment had a bit of a shocker as well. The employment change was expected to rise 17.6k, came in minus 65.1. The revolving door working on the full-time, part-time moves there. Full-time employment down 106,000. Part-time, which for some reason isn't shown on there, was up, I think, some 45,000, if memory serves. So say revolving door in action now. The unemployment rate stayed steady. That might be due to the fact that the participation rate came down quite a hefty lump for this sort of number, 66.8% versus 67.1%. Likely if that number had stayed around those sort of levels as previously, the unemployment rate might have jumped up a bit. But anyway, bit of economic weakness, or in the job sector anyway, in Australia. The RBA will be keeping a close eye on that one. Again, as per this time of year, it could be a bit of a seasonal thing, holiday hiring and whatnot.
Yeah.
Maybe needs to see next couple of months, just see it comes out in the wash. Go on, mate.
Yeah, I've read the report coming out, and it was a lot less alarming the ABS report over there was a lot less alarming than the headlines may have shown, because they're saying that it's a bit of a give back of the past 3 very heavy months, hiring months, and because they said like it follows an October-November combined increase of 170,000, and there's only been a net loss somewhere of only small following the number of unemployed people, only 1,000. So I mean, they really brushed it under the carpet, it seems.
Yeah, very much so. You can see those numbers there on the screen. We had 2 really strong reads. So yeah, maybe a bit of a give back on that one. But yeah, I mean, the Aussie dollar certainly didn't react too negatively to that. Dropped about 20, 25 pips or so, hit the low that we made yesterday, give or take, and has bounced since, although we are struggling to really bounce and get back up through this break point and this fib. So for now, this zone down here is holding. Zone with a lot of people been flagging and trading as well. It's holding for now. But we need to see, for those that are long like me, we need to see a break here of this 65, 60, 70 area and then take on the big figure up above. If we hold below this level, we're probably going to mooch again back lower, and maybe we head a bit lower still and keep this trend going. That's what the Aussie can do sometimes. It can make a move, then go sideways for a bit before making another move down. But we shall wait and see. SMB's Jordan was speaking yesterday. He's due to speak, and I don't know if it's out yet. Kay, did you put the thing in the newsroom? Was that his speech?
Jordan, I haven't seen a speech. If a speech is out, I haven't seen it, but I know he's talking on the World Economic Forum in Davos, right? And they're talking about what's next for monetary policy. So I'm expecting headlines to hit any time.
Yeah, so we'll
now.
keep an eye on
Yeah,
that. But in the meantime, go on.
Yeah, I'll keep an eye on those. If anything significant happens to the Swiss franc. You know, yesterday he said he came out with those comments saying that he thinks it's enough for now, but at the same time also saying somewhere between the lines, don't destroy the good work, you know, because he said like things could change. So I expect him to talk along the same lines, unless he has something more to tell us. And yesterday was just a test run for what he will have to say today.
Yeah, exactly. He said Swiss franc, I'll just read out the line. Swiss franc is now appreciated in real terms. Franc is now stronger and need to take that into account. Franc appreciation pushes down Swiss inflation. We currently have adequate conditions, but that may change. So that was his comments from yesterday. We'll see if he embellishes on those if and when he starts speaking today. ECB's Nagel, head of the Bundesbank, was out yet again, saying that rate cuts will come sooner or later, and that core inflation remains rather sticky. Coming on to some of the data from yesterday as well, just something I want to highlight, just a couple of numbers that have been coming out in the housing sector, looking a bit positive. The NBA weekly numbers that I often just keep half an eye on, just as a general gauge of sort of week to week housing markets. It can be a bit funny over the holiday period. Obviously, no one really is moving house, you know, those last couple of weeks of December, so things can die off. We saw that in the mortgage applications, which took a bit of a bath coming into the latter part of last week of last year, as you can see there. So that was the week before, or the Christmas week, shall we say. We've had 2 strong numbers in the applications coming in. So there's some bit of a bounce back, maybe a bit of a backlog clearing, as can often happen, but it's good numbers. All the indexes going up as well, refis, mortgages, mortgage rates and everything looking okay there, refinancing as well. So a bit of positivity in the housing market. That's been reflected also in the NAHB number, which came out yesterday as well, National Association of Home Builders. That came in at 44.39. That's a January number. Okay, so that's more reflective of the new month as well, because today we get housing starts and building permits, but that's going to be for December. So again, running into that often slow part of the year. But so far for January, the housing market looks like it's got a little shot in the arm. So that's something to keep an eye on, because that will be looked at as well closely by the Fed to make sure that there's no problems in the housing market, particularly with prices and stuff. So that's looking tickety-boo there. Retail sales was the big number yesterday, and they all came in a beat of expectations pretty much across the board. Headline retail sales 0.6%, core sales 0.4%. All the bits and pieces that you strip out all came in positive as well. Not huge numbers. Okay, we're still talking 0. This and 0. That. So you might think we would have got. You would have looked for a more solid number, being a heavy sales period, holiday period. But positive is positive, and the market took it that way as well. We also got some import and export price data, all pretty much coming in, particularly on the year-on-year numbers, in negatives. Not as much as last time, but it's turning into a bit of a trend of negative numbers. Seeing that, if we see that start to really translate to PPI, then we might start seeing that translating into CPI as well. So there is still some disinflationary pressure, shall we say, coming in from those parts. Canada as well had some PPI data, and again some negatives, all negatives really. So that disinflation shown up there, some more than others. More material pricing coming worse than last month. Pretty much all of it coming worse than last month, apart from the month-on-month number for there. So again, still disinflation metrics in Canada as well, which might make that CPI report we got earlier this week, where CPI was sticky, just a bit of a one-off effect or event, and inflation may continue its downward path. We also got the Fed's Beige Book out, which is the look from the regional districts, sort of mini surveys running those districts about economic activity. Not much to write home about. The majority of the 12 districts reported little or no change to activity since last Beige Book. All else, prices were coming down, or price rises were coming down still in that survey there. On the rate odds front, Fed swaps have cut their March bets. Now see a rate cut in March at about a 50% possibility. The BOE have seen 2024 hike expectations now cut to 4 cuts from 5 cuts previous. So the market perhaps getting a bit of a dose of reality between what the central bankers have been saying, what the data is saying, and what the market expectations are. And on the jobs front, now the headline crossing the wires from one of the big firms, Shell is apparently beginning to cut hundreds of jobs. They say it's a push to boost performance. It just goes in the melting pot I've been highlighting for a while now. Just some of these companies cutting. We're hearing more about job cuts than we are about job gains at the moment. Does that mean we're ready to see the jobs market collapse? Not necessarily, but the trend is your friend, as they say, and all these little numbers coming in show things going one way. Okay, got anything magic for us?
No, not really. It's been extremely quiet overnight, right? The only thing that I would add to this beige book thing that you were talking about, it was like very similar. If you look at what the zoo came up with, they said pretty much a similar kind of line, saying prospect of falling interest rates was cited by numerous contacts as a sort of optimism. So the same thing happened in the zoo, right? That you commented about. And it seems that a lot of people are now starting to hope for rate cuts, and that's probably a bit of a risk, since we heard from a number of central bankers that they are willing to wait for longer than what the market could or wants to anticipate. But
Yeah,
for us, I
exactly.
haven't seen much overnight, mate. Those Japanese numbers, they are very volatile. It all depends whether there have been big contracts done or not. I recall a few months back where the number was very positive, and they tend to be very volatile, those machinery orders. Usually it's not a big trading. It doesn't give too much food for a trade, because you see it there, right? On the chart that you showed, how volatile those numbers can be.
Yeah, that was the month-to-month numbers. The year-on-year numbers show a bit of a different
Not really good
story.
yet.
Shows a different trend of
No,
negative numbers. Yeah. So yeah, not all that good. Yeah, it's
no.
not a huge one, but it just goes into the mixing pot for when you're
Mhm.
looking at what's happening in the economy. We know the manufacturing side's been a bit soggy, like it has been elsewhere.
Yeah,
Um,
and those
yep.
core machinery, they are also, that's not only Japanese based, it's also the big machinery orders, I think, for the exports as well are in there. So that's not a great number indeed.
Yeah, yeah, the likes of Komatsu,
Yeah.
heavy plant machinery and things like that. It's still a big part of the economy over there. So, yep, not looking too good. Right, what's going on price-wise? Already spoken about the Aussie. I'm in a little bit of a long here, looking to buy into this zone, as mentioned yesterday. It is doing its job for now. Technically, you want it to do exactly that. I was looking to pick up a bit more 65.20, but we didn't get that far, so probably being a bit greedy on that. If you're looking at this as well, your line in the sand is really down towards the 61.8 fib and big figure, probably down to 85.90 as well. So if you're playing this one as I am, a break below there will not look good, and I'll be running to the hills if that happens. But for now, the zone is holding, but I'm just a bit cautious because the bounce is looking very weak at the moment. So I need to see where that one goes. Dollar yen, it's had a little bit of might be a little bit of a blowout. The move above 148 peaked pretty quickly and came back down overnight. We're now just holding below that 148 once more. So could be that, as I say, we just had a little bit of a blow off the top, and now we'll see what happens here. If we get it back above 148, then we're probably not done with this high or with this move in its entirety. So maybe looking for a bit more to be done. No jawboning from any of the officials. Maybe yes, it has been a strong move, obviously this year, but maybe it's not volatile enough for them to start piping up. It would really perhaps only be the level of the yen at the moment that might get them starting, or they know that something's coming from the Bank of Japan, so it won't matter anyway. What are your thoughts on that, Kay, about lack of any comments?
Yeah, it's been very, very quiet. It seems they're busy with other stuff, or just waiting for the Bank of Japan, as you say. I don't know, mate. I mean, it's a big run. We've had moves that came close to 150, 200 points in a day or so.
From Japan, Prime Minister
But
expanding.
sorry, I was just listening to the score. Yeah, it's the market has virtually priced out everything that would possibly come from the Bank of Japan next week. That opens to me this very small percentage of a bit of a risk. I said if yesterday I said in the rooms, if I see another spike there, I don't know whether it's over across or the dollar yen close to 150. I may just do a short-term option to the downside, see if there is any surprise coming out of the Bank of Japan. But Ueda himself and other participants, other Bank of Japan government members or council members, I don't even know, recall what it's over there. they have all said that they would wait for the February wages. So why would we wait for something else, you know? But I do think that the wording will be changing again. But is that going to be enough for a market to change tack? I'm not sure, you know. So yeah, I'm still on the defensive for the yen into the Bank of Japan unless something changes in one of the other major counterparty currencies, right? If something would change in the dollar or the euro also. But for the time being, and again, as I said, it's not only dollar yen. If you look at the yen crosses, they're all very big, right?
Yeah, exactly. And as much as I've been happy to want to short this, I haven't wanted to stand in the way of this one since my last trade. So I'm letting this one do its thing for now, particularly with the Bank of Japan next week, and maybe see what happens after that. We need to keep an eye, obviously, what's going on the US side. So if there's any signs that this dollar rally that we've had in place is petering out a bit or coming to the end of that run, then any jump in dollar yen on the back of the BOJ, I might look as a little selling opportunity if the dollar's not as strong elsewhere. But plenty of time to see what comes out of that one till next week and the BOJ meeting. But a bit similar to the Aussie, but the opposite way around. Obviously, we've hit a high, we've dipped. The dip isn't overly big, so we're not out of the woods yet in terms of seeing further upside. Got this bit of a level down here that's just been on my chart for ages. We're hitting support there. I would think back below this this broken 61.8 fib around the 147.5 mark. If we get back below there, then maybe we're going to start forming a bit more of a solid top up there, and then 147 is the key level under that. So yeah, a bit neutral up here. See what happens. See what it wants to do. Some of the others, cable. I know a few of us jumped into this one yesterday after the data. Looking okay, just banging its head a bit on 127 after the bounce from 126. Still finding plenty of buyers on dips, it seems, for this one. But now we're just, again, banging in the middle of the range. So apart from managing what I've got, I'm not looking to do anything more with this one in the middle. See if it gets a move up to 128. I'll sit in this trade as long as I can. See where it wants to go. If it comes back down, well, that's a different kettle of fish. I'll need to look at that one. Euro sterling, I know it's coming a bit of a bane for a few people. We know MK, you're waiting for this one to really go, and it's just taking its sweet old time.
Yeah, it's changed. I'll show it as well. It's just changed, moving the box, you know, where it's trapped inside. But yeah, I mean, I'm somewhere trading it in between really short term and then keeping a base short, which I have running for quite a while now. And yeah, we just changed the box from 80-20 down to 65-95 also. The good thing for now, for those who traded to the short side like me, is that we are finding offers already around 90, just above 90, which probably right now tells us that people who had stuff at 86 are happy to offload before and trying to pick them up around 70. I still think there are range players trading it. Whether it is linked to options or purely trade the range, that could be enough. And also, tomorrow we get those retail sales, right? That may be the clincher for a move lower then, or if they are not too strong, then I guess we are back into that 85, 70, 86, 20, 30 box, you know, and just continue to mooch around inside that, unless the euro shows us something different, a different phase. That's about it on the sterling right now. I'm with you on that cable. Bought it as well. Well, played those numbers, that CPI quickly as well, and then yesterday evening really the bit more of a base trade. around 126.5. For as long as that 126 around holds, it's still, I guess, the play to have. We've seen the dollar strengthen elsewhere, but sterling has been relatively resilient. So unless the retail sales show us something different, it may continue for a while.
Yeah, very much so. Euro dollar, everything's looking a bit similar. We've made lows, we've bounced, but the bounces don't look particularly strong. We got into pretty much the middle of my zone down here, back above, banging ahead 109, 109.10, coming down. Now we're finding the top of the zone support again. So, this is why I have these sort of zones on my chart, because the price does stuff around it. It's not necessarily that you want to buy it off it, sell it on the break or whatever, but it's just somewhere where, if you were short from up here, you're running into trouble. And if you want to see, your shorts gain further, you've got to see what happens around here. If you can't break through there, then it may be time to take a bit more off the table. Same for longs. You want to see it holding where it wants to hold, but be mindful where it's going to rally to. So this one, not doing an awful lot. Does look a touch weak, since we broke this pattern here and now holding below 109, 109.10. So not out the woods on this one either. Do we go up? Do we go down? Use the levels as your guide. But certainly if we crack through 108.30, it's going to look a bit more bearish on top of what we've already seen. One more before I hand the baton over to Mr. K-Man. Gold, I've been keeping an eye on. We had this level, this 2010 level, which was a big resistance area prior to the big bust up. We're down mooching around it. I've been saying watch this 2010 area, maybe right in down to the big figure as well. So we got to a low of 02 and have bounced, but the bounce so far not looking awfully strong. So if you get a bit of a period where we've had a couple of goes at trying to get through 2000 and can't, then that gives you your conviction, if you're feeling a bit bullish, to try maybe a buy and look for a run back up somewhere to maybe the 2020, 2030 area. But if the bounces look pretty weak, and if we bounce off the underside of that trend line there, then that might suggest that further downside is incoming. I'm not overly keen on trading this one at the moment, but I might do if I see more of a hold at this 2000 level, but we shall see. K-Man, take it away.
Yeah, I'm going to show a couple here. First of all, Ali, yeah, I'm patient sometimes, even though I surprise myself of for being not patient enough at times. Once a trader, always a trader, and a trader wants to trade. So sometimes I'm a little bit too fast for pressing the buttons as well. Look, your Kiwi. I was showing this in the room yesterday. I know it's daily. It's not a short term. I know you're much more short term, but I think it's worth paying attention to what happened yesterday in the Kiwi and overnight. See this low here in December 2013. See where the 200 DMA is. See where the daily cloud lies. Okay, that was all happening in the 61, 60, 80, 60, 90, 60, 85 zone, and then you have more fib action around here. We could say we've come a long way. Never say never. The dollar is still overall pretty big since the start of the year, but we have to look at those levels. Okay, so if you're short in the Kiwi, or for anyone short or long, this is a zone to pay careful attention to, in my opinion. And on the other side, we've seen a bit of the revival here up to 61.5 when we did the first low, went up to 61.5. And look, there's a lot of activity here in the 61, call it 45-60 area, 45-65 zone. Okay, so I think we're
French inflation
still. I mean, the overall feeling since the start of the year is still a bit more negative, but we start to find support on levels where it should really find support if it wants to stop going down. Okay, so I think if we start to get back above this 61.45, 65 zone, you may find a few shorts who played the short term, like for instance from 62.25. I know some people are a bit short from this zone here. I guess if we start to get back above this 61.45, 65, this trend line here as well, then I guess people will start to run and cover the short. So be a bit careful what you with the positions around here. Yeah, that's about what I've got to say about the Kiwi. Aussie exactly the same as Ryan. Needs to get back above 70 and then needs to get back above this zone here as well, closer to 66 to reverse. Okay, this is still looking pretty off at this one, but again, similar to the Kiwi, we've held the zones that should hold somewhere here. We are holding them, and I must say, a bit to my surprise on the headline reading of the Australian jobs report, it really needed a second reading to find out why the market really shrugged it off so quickly. It's just one little spike here, being complete and straight away undone. So the Australian-based traders seem to have known that this was just going to be a bit of a give back and not change the overall picture. I've let mine go. The ones that I bought around, where was it? Around 30 in the fixing here yesterday. I've let them go because I don't really know what to expect, but I have to say that it's looking pretty resilient, the Aussie today. So if I see a dip, I may try to re-enter that little baby there, if I see that dip. Okay, brand. All right, brand. I'm going to repeat what I've been saying over the past sessions. So and actually over the end of the year as well. Fundamentals in Switzerland have only are only a small part of the picture, because it's been very much driven, whether it's dollar Swiss, euro Swiss, all Swiss pairs have been very much driven by what the S&P was doing, and that is buying Swiss franc to combat inflation. Now we've had this acceleration into year end. It was sort of expected. I did put that in the room a couple of times. It was sort of expected that the Swiss would strengthen more into year end, and then a couple of us started to counter trade this, and now we are, as I said, the first hurdle was 85.5, and now we've cleared that. It seems that we are starting to form a bit of a channel here. Okay, so I would not be surprised that at some stage there is, if the dollar corrects, there is a bit of a retest of this channel now. But also note on the top end of this freshly formed channel lies exactly at the 32.8, and that's the level we tagged yesterday, around London fixing time. Actually, we tagged that one to the pip. And so 86, 83, 85 is really the level on the top side that really now needs to go for a chance to get back into the mid 87s. If it goes, then I reckon we are on our way to 87. But again, we are expecting Jordan to speak again today, and know that Swiss franc is not only about fundamentals. If you look at the fundamentals, and if you look at the CPI, for instance, CPI is back in their range. They should not raise interest rates anymore, which are at 1.75%. So look at what's happening on the interest rates. The numbers have been average in Switzerland. I don't think there's a lot that justifies much more Swiss franc strength. It's been strengthening a lot. So I reckon naturally it should give back some of the strength, but we always need to reckon with what Jordan has to say, because if he judges that the Swiss franc is already weakened enough compared to the levels that we saw before, he can come back into the market at any day and start to buy Swiss franc again. Is it here? We don't know. But this zone around from 87.5, assuming that we may be in for a little bit of a break, up to this one is still my magic level in the Swiss. Dollar Swiss, 88.15.20, 88.15.20, 88.15.25. You can go back a number of times. That has been a level that the market has always traded. And accelerations, when you get through, then you get back up there and it stops. Okay, then you get back. But then here, towards the end of the year, it's been a big level. It's a little bit like your 126, 10 around 126, the figure in the cable right now. But okay, the cable is much closer than that. But in the dollar Swiss, I would really pay attention to what happens if we get back into this zone. And we find it back in the Euro Swiss as well. Euro Swiss is in a downward channel, okay? But so over the end of the year, we've accelerated through it. That's all year-end flows, okay? So we broke the channel. We went below and then started to move back above first week of January. I had a small intermediate trend line here around 93.90, which gave way. A lot of people were looking at 94.10.20. Those prior lows. We're turning around. Okay, I'd say that if Jordan is all right, saying that the Swiss franc has strengthened enough, there's a possibility that we go for a retest of 96, the figure. That's my base ID, kind of base ID right now. Call it 95.75, 96, the figure, the top end of that channel. Once we are there, then we are going. If we get there, then we are going to have to reassess what to do with the Swiss franc. If Jordan doesn't say anything, then there's a possibility we get back to the next big level, which is up in the high 96s. But again, it's Swiss franc, okay? It's not the same mover as yen, for instance, or a cable, for instance. It is not, all right? It's usually moving a bit slower unless S&P decides that the market can do its thing, all right? So that for a bit of Swiss franc things. Ryan showed gold. I'm going to show the silver. That I've got a little bit of support around here, but I've already been asked on F.A.C.E what or where I would feel comfortable in adding. I'm watching very carefully what the dollar is doing. That is one thing. I'm watching what economic data are doing. That's another thing. And I'm watching a little bit of those geopolls as well. In fact, I'd love to see a little bit of a break here and then start to see what's happening in this zone here, 21.85 up to 22.40. That's a zone that I'm really watching very, very, very carefully. It's also prior lows here, okay? So before we had the big shakeout and the subsequent rally into also year-end, roughly. So that for silver. And what else? Is there anything else you guys want to look at? Yeah, just coming back onto the MEX. You see that Trump Iowa lie thing where the market got very nervous about the Mexican peso, and I said it was a bit of a blueprint or test run of what may happen in case Trump got elected, and that's what we got. But it lasted for a good day and a half, and then we started to come off again. That's the thing when you're trading an 11% still currency. It's very tough to be short MEX for a long time as well. the opposite of the spectrum of the yen, really, right? So we're already back or testing those levels here around 17.18, 17.17. If we close below, then we're probably going for a retest of 17, the big figure. That's what I'm thinking. And that's about it for me for today. Globally speaking, the market is in ranges, barring some currencies like the yen, which is getting hammered. Swiss is on a possible reversal, but the range is also been confirmed by the euro dollar. Look, yesterday people highlighted this average here, 200 DMA. It stopped right there. It also stopped just above the daily cloud in euro dollar. We can push lower, but like similar to what happened in the cables, similar to what's happened in stuff like Aussie Kiwi that I showed you as well. We are on levels where at the end of the year we were on levels for the weaker dollar. Now we are on levels for the stronger dollar. So I would not rule out that we continue to range trade for a while. And that's it, Brian. Back over to you.
Thank you very much, mate. I've got not much more to add to that. I will grab the screen back just quickly, just to show what we've got coming up on the data front. Philly Fed manufacturing, keep an eye on that one today, because obviously that stinky Empire number we got, so that might just get a little bit more focus than it would have done normally. It is a regional number, so just play it into the pot of what's happening so far in the early part of the year. Expected to fall -7, so not as bad as the -10.5 previously. Jobless claims, they're doing their usual stuff at the moment. No flags being waved there, but we can always see maybe there's an odd number popping up there. As I said, housing starts and building permits, some of the hard data coming out, December numbers, so coming into the latter part of the year, so just keep an eye on those. I'm going to be maybe playing it the same way as I did for the retail sales. If they're good numbers but not game-changing numbers, I'll be looking at things like cable again, maybe add back in on the dip, just as a bit of a counter trade for those strong numbers, just trying to pick the currency that might bounce back quicker than some of the others, and cable seems to be the one at the moment. And that's that for today, boys and girls. Have a fantastic day. Trade well, trade safe. Thank you as always to K-Man for his valued insight, and we shall see you all bright and early tomorrow.
Have a good day, guys.